Hello everyone, and welcome to this presentation with StrongPoint. My name is Øystein Lodgaard, and I'm one of the analysts that follow the company here at ABG. Now I would like to give a warm welcome to Jacob Tveraabak, which is the CEO at StrongPoint. The floor is yours.
Thank you so much, Øystein, and thank you for giving me this opportunity to talk about StrongPoint at this introduced day. So today I want to go through a very short intro and then give you all a little bit of a glimpse of what StrongPoint really is about. And then in good orders, you are probably also somewhat interested in the financial figures. I will be sharing the latest financial figures that were published regarding the Q3 this year. First and foremost, I should say that StrongPoint, we are a retail technology company. That is first and foremost what we are. And for those of you that have been following StrongPoint, you will, when you see this presentation, you will already now notice that both the color scheme and logo of StrongPoint is somewhat changed. And that is to reflect what we really are. We are providing retail technology in every shopping experience for a smarter and better life. And we're doing that both in store, but also online. On the next slide, I'll be talking about what we have named the double opportunity for StrongPoint. So this was even pre-COVID-19, we were talking about the double opportunity. With COVID-19, we just see this opportunity being accelerated. And the opportunity itself stems from a general growth in e-commerce in retail and in grocery retail particularly, where we are focusing our efforts. And if you just think about sort of the growth in e-commerce, again, both pre-COVID-19, but in particular with COVID-19, the emergence and growth of e-commerce is causing a margin pressure on the in-store operations. So basically, you're taking sales away from the stores, putting it online, and you're not able to compensate 100% for the loss of or windfall of sales, and as such you end up with a margin pressure. That's where StrongPoint's solutions in store come into play to make the store more efficient. The second opportunity is e-commerce in and of itself. If you haven't already, as a grocery retailer, moved online pre-COVID-19, you for certain have started or are very close to be starting your e-commerce efforts. And StrongPoint have all the solutions needed from an order comes in to do picking and delivery to make that happen. And not just to make that happen, but we have world-class solutions to make that happen. I wanted to, on the next 2 pages, give you a very short glimpse of what are the solutions that we actually do have. So starting with in-store, we have solutions ranging from self-checkout solutions where we provide both hardware and software. We are a proud distributor of Pricer electronic shelf labels, where we have contributed to, in particular, Norway, but also Sweden being one of the highest penetrated countries of ESLs in the world. We are also growing that in the Baltics and emerging so in Spain. We have the VenSafe solution, which is a solution to protect high-value items, typically cigarettes, snus, in the store. We're also a proud distributor and leader of Reflexis's workforce and task force solutions in the Nordics. And many of you will also have known the cash management solutions that we have installed at many grocery stores in Norway and Sweden, but not least cash being king still, even with COVID-19. In southern parts of Europe, that is an area where we see cash management solutions being in demand. Our e-commerce solutions are also integrated with the stores, and here we're just showing that with our picking solution and click and collect lockers. So we have a number of our grocery retail customers doing the picking of e-commerce orders in the store, and also delivering that to click and collect lockers at the store. But more specifically on e-commerce, on the next page, we're basically showing how we're serving the full value chain. So from an order has been received from a customer shop, we have the solution to do the picking either in store or in dark stores. We have the solutions to make sure that we get the deliveries home, if that's the case, or in a drive-through and click and collect solutions. And throughout the order process, we're ensuring that both staff internally are getting the necessary communication and messages, and likewise with customers. And more so, we're growing increasingly in, I should say, confidence about the solution that we have. If I, for a second, may just pick on our picking solution, we're seeing that our solution, where we are achieving with existing customers in the top quartile 240 items or more per man-hour being picked, we're seeing that is sort of a 3, 4, if not 5 times the picking frequency you'd see in a default US or UK environment. So very proud of that. I think then on the next page, just wanted to again emphasize that we are a retail technology company that have been around for quite some time. All the major grocery retail customers in Norway, Sweden, and the Baltics are customers of ours with one or more solutions. And in here you will also see 1 or 2 Spanish customers where we are increasing our presence. I believe on the next page we'll have also a little bit of the highlights of Q3. So to give you a little bit of flavor of what sort of sizes are we looking at. I'll go through each of these 3 highlight areas. First and foremost, the financial performance in retail technology and overall for StrongPoint as a company. I'll be sharing some of the customer successes we've had. And lastly, I will also touch upon the progress on the way to the 2025 strategic ambitions that we shared some 9 or 10 months ago now, earlier this year. So Q3, we achieved a top-line growth of 19% when you compare with the same quarter last year. Of course, 19% is what we would label as strong. That is in a situation where we are growing our business in most areas and most countries, but is actually absorbing also a decline or retraction in our Spanish operations, where we historically have had cash management solutions being sold to the HoReCa and hospitality segment. And as you would all know, that's not a segment with a lot of traction right now. So which just makes the 19% growth even a better and stronger performance. Moving on to the next slide, I wanted to share with you how this splits out throughout the different business areas. And again, we are a retail technology company. We happen to have a cash security and labels division in addition to that, but we're primarily a retail technology company. And as you'd see from the figures, 80% or so of the revenue stems from retail technology. The growth in Q3 was to a large extent driven by cash security in relative terms, just because there is a lot of fluctuation in that business. But if you look at the absolute figures, you'd see that most of the growth comes in retail technology. I'm also very proud that this is the area or country or area in which Spain is lying, which means that the growth in the other markets have been substantial or very substantial. Actually, in Norway and Sweden. In this quarter alone, we've seen about 40% top line growth, so 40% growth. Moving on to the EBIT, I'm sorry, that's the right as well. The relative share of revenue follows what you'd expect. Our e-commerce business have been growing from last year 5% of top line growth to a double, close to or in the range of 10%, and we're expecting that to continue growing. And as you also see on this slide of relative share, the payment solutions have been in decline. So overall, as StrongPoint, we have a very balanced portfolio coming from a history many years ago where StrongPoint was more known as PSI or cash management solution. So today we are a much more balanced portfolio, and we are really in the areas in which we are seeing a lot of growth. Then moving on to the profitability, as we're saying, we want the profitability to tag along with revenue, and it does so, and more than just that. In Q3, we had a close to doubling of the EBITDA for the company as a whole, so 35 million kroner EBITDA. Again, if you go to the segments, you will see that on the next page, you will see that there is a lot of improvement in the cash security, as that is getting up to a critical level of activities. But you will also, of course, notice that the retail technology EBITDA is at 29 million kroner, or close to record high numbers historically. And this is really where we want to be. This is a EBITDA margin of north of 13%. We have earlier presented in the strategy 2025 ambitions that we want to have a group-wide turnover of 2.5 billion driven by organic growth, and that we are bound to have a profitability levels of 13 to 15% EBITDA. So with retail technology achieving 13% or more in this quarter, I'm very pleased and proud about that type of performance. So those were some of the financial figures I wanted to share. Other highlights that are important for you as investors to know about is, well, first and foremost, in Q3, and that will also be the case for Q4, we are delivering on a order of ESL for Norgesgruppen, one of the largest grocery retail company in Norway. Some of you commented on that being a surprise, but for us as StrongPoint, being a solid and long-standing supplier to a company like Norgesgruppen, this comes not really as a surprise. This is the result of high-quality deliveries year over year, but not least very pleased to be able to attract that order and deliver on that. On the second point, I have click and collect deliveries. And as you'd expect with COVID-19, we have been delivering lots of click and collect lockers, both stationary, which is the primary type of click and collect lockers we have, but also mobile lockers, which you see on the right-hand side here. So we have several proof of concept with, I should say, leading grocery retail companies around the world, and hopefully this will also develop into pilots and rollouts. So very pleased about that, and looking forward to be able to present something for you in not too long. Likewise, on our picking solution, we have a continued very strong demand for our picking solution. And as I said initially, we are feeling more and more confident about the performance abilities of our solution. Having both benchmarked versus competing solutions, but also speaking with grocery retail clients, and we're talking leading grocery retail clients or companies in the world, we feel more and more confident that we have really a diamond in the making when it comes to our picking solution. So again, lots of exciting demand, and looking forward to be able to present something here for you that also solidifies this with customer cases. Lastly, if you may move on to the next page, I wanted to give a little bit of a touch base on the strategic ambitions we set. So the strategic ambitions, again, for StrongPoint, 2.5 billion organic growth and 13 to 15% EBITDA margin. We have proven now, I believe, with both Norway and Sweden and the Baltics, that we have operational leverage. We are able to take on new solutions, but also new orders, and being able to produce very nice bottom line with that. We're still in the making of seeing this being the case in Spain, but have ambitions and plans still to grow the Spanish operations to similar sizes as we have in these other countries. Also important in the strategy 2025 is delivering on the supporting elements. So we are, I like to say, only a 1 billion kroner company, but we have had to do a number of recruitments in sales and marketing to make sure that our solutions are being known out in the market. And we are also implementing a Salesforce CRM system that will be live and kicking in Q1, or actually in January. And that is going to be more and more important for us, that we operate as one company, being able to link the marketing efforts that we're doing with the sales efforts, and ensuring that we get a lot of success with the solutions we have in our arsenal. Then lastly, this was from Q3, so this was the proposed dividend. The dividend was approved by the General Assembly and follows the policy from the board of having a growing dividends over the years. So this year we delayed the decision as the General Assembly was bound for April in the midst of the Corona pandemic. We had the GM on October, and they paid out 60 øre or 0.6 kroner dividends this year in November. So rounding off from my end, on the last page, we have over the course of the year, as the pandemic has evolved, reiterated the 2025 ambitions. We will be achieving 2.5 billion NOK revenue through organic growth, and we do have a EBITDA margin objective of 13 to 15%, and as said earlier, we have proven that is absolutely possible in the retail technology area, which is the focus for StrongPoint both now and going forward. So with that, I'd like to thank you all for your attention, and Øystein, I understand you might have some questions.
Yes, thank you, Jacob, for a very interesting presentation. To start off, you mentioned, of course, you had delivered some of your click and collect lockers. Do you see that as COVID has accelerated the shift to online grocery shopping, do you see that this in general has increased the demand for your e-commerce solutions? Absolutely.
I think it's without the question of the doubt that e-commerce is growing very rapidly in the grocery retail space. For those companies that were customers of ours on e-commerce solutions before COVID-19, we saw an acceleration in the deployment of our e-commerce solutions. And for players or companies that were about to start, they have started. And then we have many more to get started on e-commerce solutions. I think all grocery retailers that in the past have been reluctant, and maybe rightfully so, to go into e-commerce because of historic profitability question marks, are now seeing that there is no way you can be running a grocery retail chain without having a e-commerce offering. So I feel very confident about the e-commerce growth going forward as well.
Exciting. And I also know that you're working on a software version of your e-commerce logistics suites that I think that you're going to launch from 2021. Do you think that this could be an important growth driver for you?
Absolutely. So historically, we've, not to make this into a history lesson, but we acquired a company in Sweden back in 2018 called Cube. We have invested heavily into that solution, and correctly so. This is the third generation being launched early 2021, which is a fully cloud-based solution. So we are very excited about getting that out in the market and starting to get the customers onto that solution.
Exciting. And you mentioned that you're currently delivering a big ESL order to NorgesGruppen. Should we expect that it could maybe become more orders from NorgesGruppen from 2021 and onwards?
I wouldn't want to single out specific customers, but we have long-standing relationships with all the grocery retailers in Norway, Sweden, and the Baltics, and we also have a very strong and good relationship with Pricer. So one thing being that the Pricer ESLs are superior to its competitors, but we also believe that we have the cloud credibility and history with the customers to ensure that the solutions are being deployed correctly. And it should also be said in that aspect that there are also links between the ESLs and our e-commerce offering. I've mentioned on the earlier occasion the ability to do what we call pick by light, so meaning you would be facilitating or helping the pickers do the correct picking at a faster rate when you integrate the picking solution that we have with the Pricer ESL. So very confident about that, also supporting a continued growth in general in ESL.
And M&A is also a part of your strategy. Could you give some flavor on what type of companies that you may like to acquire?
Yeah, so I just want to make it absolutely clear that the financial ambitions that we've set are organic growth. But you're right, we have M&A activities to further grow beyond that. What we are seeing now during the pandemic is that there are a couple of geographies which are emerging as having a very good product market fit to StrongPoint's offering. So without going into too much detail on exactly which country those are, there are 3 or 4 countries where we're seeing the very nice demand for e-commerce offerings, for self-checkout offerings, for Vensafe as well. And when we believe that we have a sufficiently big product market fit, it might also make sense for us to not just hand over the business to partners, but also be and take part of the business opportunities arising there.
And can you also say a bit about what types of new products that you may want to add to your portfolio going forward?
So we are going to continue growing and developing the solutions we have. First and foremost, that is within e-commerce. We have a solution ourselves. We're also in a number of dialogues with, for instance, MFC players or micro fulfillment center players, which could be relevant in the cases where you want to have express deliveries and you also have sufficiently high demand, as an example. So integrating our solutions with those types of solutions will be important. Beyond that, this will be continuing to develop our self-checkout solutions, and then it's self-checkout solutions along with other types of self-checkout solutions to make it even more relevant in the climate we are in. We're looking at, for instance, total contactless self-checkouts. We're talking about self-scan solutions as well. And again, we're in a number of discussions with smart trolley providers as well, where we could see our solution being integrated. So e-commerce solutions and self-scan and check efficient checkout solutions are clearly areas in which we want to continue growing.
Okay. Thank you very much, Jacob, for taking the time to present to us here today. I think it's going to be very exciting to follow StrongPoint in the years to come. And thank you to everyone who listened in. I wish you all a great day.
Thank you.